there were some general themes that were out there. One, that there are businesses that are looking for loans out there that are profitable and ready to make money. And the key is to match them up with banks that are in a position to lend. There are some banks that have seen the increase in the savings rate and higher deposits give them a pretty good capital base, but they're still constrained by some regulatory restraints. We are looking to see if there are possibilities to cut some of the red tape. We don't have direct influence over our independent regulators, but we think that the more that we can highlight that in some ways the pendulum may have swung too far in the direction of not lending after a decade in which it had gone way too far in the direction of getting money out the door no matter the risk, that if we can get that balance right, that there are businesses and communities out there that are ready to grow again, and we just need to help make that happen. I also had a discussion with all these bankers about the prospects for financial regulatory reform. As I said, many of the issues when it comes to large systemic banks, what precipitated the crisis on Wall Street don't apply to these smaller banks. Most of them are very supportive of the idea of financial regulatory reform. I think fairly, they just want to make sure that as we regulate better, that doesn't automatically mean that we're just loading them up with more paperwork and more burdens.